Hello everyone and welcome to the Smashi Business Show. Today is Tuesday, March 25, 2025 and it's the last week of Ramadan. I've been telling that to you guys for like the last week. It's ending. Ramadan is ending. We're not happy about it, but the business world be back up. My name is Abdul Majid Awan and I have with me.
And I'm Warid Ahmed, and we have a great show for you today. And for the three headlines that we're going to be covering today, firstly, Saudi Arabia's public investment fund has ordered deep spending cuts across over 100 companies. Secondly, Temasek's $54 billion asset management unit opens an Abu Dhabi office. And finally, Warner Brothers Discovery buys 1/3 stake in Dubai's OSN.
And please stay with us till the end of the show because we're going to discuss a very interesting case study of Aramex and their implementation of global strategic alliances and how they used it to grow so big that finally ADQ bought a majority share in them. So starting with the very first story of the day, yesterday AGBI did an exclusive report and it said something like Saudi Arabia's public investment fund has ordered significant spending cuts across its vast portfolio. We know there's like more than 100 plus companies under PIF, which work directly under PIF, and then contractors and developers working them. And this has slowed giga projects and has triggered layoffs. Sources told AGBI that PIF is mandating a minimum 20% reduction in 2025 budgets across more than 100 companies, including over 50 development funds. Some budgets have been slashed by up to 60%, with certain projects frozen or cancelled.
Now, the cuts approved at a PIF board meeting in December are now being implemented. While no project has been officially scrapped, contractors and consultants have been asked to scale down work. Now, giga projects like NEOM, Diraya, and Red Sea Global are facing the steepest cuts due to high costs and slow returns.
And one major setback was the cancellation of a $5 billion NEOM contract just a day before signing. This happened in December. Bloomberg reported it. And NEOM is already scaling back its ambitions. And it's also at the center of PIF's dispute with PwC, leading to a one-year suspension of new advisory contracts with the firm, which Bloomberg broke the news.
Now, the spending pullback is impacting jobs in supply chains. Some giga project companies are laying off staff or not renewing contracts. Now, UAE-based PR firms working with PIF have also cut staff due to contract losses. Now, the Saudi government has extended the 20% budget cuts to semi-government entities as well.
And Saudi Arabia is facing a widening fiscal deficit, which is around $23 billion. And prices and reduced Aramco dividends are also impacting them. The kingdom's break-even oil price stands at over $90 per barrel, but crude is trading below 70. And this is what we've discussed over the years, that oil prices are the reason that they have to. They're suffering because of budget deficits.
Now, despite the cuts, budgets for projects tied to major global events like the 2034 FIFA World Cup and Expo 2030 remain protected. Now, PIF is also actively courting private investors to meet its $100 billion annual FDI target by 2030. Now, when I take a look at the story, Majid, I think what also does come into mind is how previously the NEOM project, the budget that was required for it was $1.5 trillion. Yeah. But now we're hearing that that budget has gone up to $8 trillion. Yeah. Now, obviously, we all know how Western media likes to behave and how, they ran with this. And really the way that I see this entire budget change, I feel like it's necessary that we discuss it, is that it's an extremely big project. Yeah. I mean, even when I set the number $1.5 trillion to you like 4 months ago and we were discussing it, it seemed unrealistic that that amount would be enough. Because did you see the photos? Yeah. I mean, of the line, the sand pits. It's like, the more that I take a look at the video, it's like land that continues, that's like never ending. It's like, when does this end? It's so large. So I think the fact that they're reaching a stage where their strategies are more realistic, and they're realizing, okay, this is actually the amount of money that we need. I think that's actually going to increase the success rate of this project happening. And I think, to be honest with you, Majid, it also might be linked to what happened to PwC, don't you think?
Yeah.
Because NEOM, it's one of the biggest projects that's being built in Saudi.
See, PwC, so we heard the Financial Times report and saw it and read it that it's maybe on the hiring of this Davies person. But what I see this move as, it's not like they're cutting back on the project. It's not that they don't want to do it. It's not that it's closing down. Everyone will think of it as a very negative story that, oh, PIF is now closing the project and NEOM is shutting down, blah, blah, blah. The main important thing that you need to realize, the technicality is they're moving away from their own money and they want now private money, private investment to come in and replace that money. So these budget cuts from the government, from PIF, is not that they're not building them at the same pace with the same money, with the same quality. It's the thing that they now want private investors to come in and replace the money that they were putting themselves. So also I remember PIF Governor Al-Rumayyan, he at FII said that we are not thinking of NEOM as a one-off project which we'll build like by 2030 or 2040 or whenever we build it completely. We're looking at it as a generational investment. It's like gold. You invest in it for 10 years, 20 years. You don't invest in it and get your money out after 3 months and think you'll become a millionaire just by investing 100,000. It's generational investment. You invest in these projects and your generations will reap the rewards from it. So
Majid,
hopefully,
what this actually also reminds me of you saying that, for them, NEOM, it's an investment for the future generation. I remember I was watching this video and it was with Crown Prince Mohammed bin Salman, and he was saying how he has no reason to hurt the Saudi citizens. He was like, I was rich before I was working here. I don't just want to cause any impact. I want to cause a long-term impact. So the fact that they're looking to make something that even one day will outlive even them. I think that's so powerful.
That's legacy. That's what he's trying to build. He's trying to build a legacy for himself, for Saudi Arabia, for the citizens, and the whole world. Even today, to be honest, even today, if you talk about a lot of stuff, you talk about the Great Wall of China. At the time, people would have doubted it. Who will build this wall? When will it complete?
Burj Khalifa.
Burj Khalifa is like a local example. But all these things, they stay even after the people are gone. So he is focused on his legacy, Saudi Arabia's legacy, and to be honest, the Middle Eastern legacy. Yeah, and talking about so much money, let's move on to the next story, which is Temasek's 54 billion asset management unit has opened Abu Dhabi office. We'll discuss why it's so important. But first, let's tell you the specifics. So Singapore's Temasek Holdings is expanding into the Middle East with its 54 billion asset management unit, which is Seviora, opening an office in Abu Dhabi. The firm will be based in Abu Dhabi Global Market, ADGM, which is synonymous to DIFC, the International Financial Center in Abu Dhabi. So it'll be joining a growing number of global financial institutions setting up in the UAE's capital.
Now, Sevoria's new Abu Dhabi office adds to its existing presence in Singapore, India, China, and Indonesia. Now, the company said this move will help drive expansion across Asia and beyond. Now, Sadiq Hussain has been appointed as the senior executive officer leading Sevoria's first Middle East office.
This expansion follows a memorandum of understanding signed between Seviora and Mubadala Capital, a unit of Abu Dhabi's $330 billion sovereign wealth fund. The agreement focuses on co-investments and broader collaboration opportunities.
Now, Abu Dhabi is home to sovereign funds managing nearly $1.7 trillion. And, this is positioning it as the region's top financial hub, competing with Dubai and Riyadh. Now, the city has attracted major players like BlackRock, like we've seen recently, which secured a commercial license last year in Abu Dhabi.
Meanwhile, neighboring countries like Qatar and Kuwait are also stepping up efforts to attract global firms, adding to the Gulf's competitive financial landscape. And we saw recently that Blackstone is trying to get into Qatar and Kuwait. They're here in Dubai. They're here. They've gotten a license for ADGM. So soon we'll see them expanding to other countries
Yeah,
as well.
and you know what I also think is really interesting about this, Majid, is just yesterday we were reading how Singapore it's trying to attract Middle Eastern investors, and the way that they're trying to do this is they're basically trying to add in more Muslim-friendly practices, and that's through making the country a safer space for Muslims. But more so than that, Majid, I find the history of Singapore so interesting. Isn't it so
Was it
interesting
Singapore
to you?
or Hong Kong?
Singapore.
It was Hong Kong?
No,
Oh.
Singapore, their economy, the way that their
Oh.
entire economy changed, I just find, because, think about it, their president came in and he absolutely changed everything. Like, by the way, the quality of life in Singapore, it's very balanced. Like, all the people there, most of them lead the same quality of life, which I find really interesting. And most of them are also investment bankers.
Yeah. Singapore has a very great economy. The only thing I love about Singapore, there's two things that I know as a matter of fact is Singapore's port is the biggest earning thing that they have. And they're one of the very few countries in the world who actually have a port and use it as like their main artery for money making. And secondly, they're focused on their culture and language. I've heard from a friend who lived there for like 4 or 5 years that they teach the Singaporean language in school and they don't teach English till 5th grade. They focus so much on their culture and language, and then eventually they start teaching English because they want to keep their culture and heritage and language, which is, to be honest, over the period of years, when you read a lot of psychologists, philosophers, scientists even, you realize that language is the main thing which drives culture. If you change the language, you change the culture of a place. There's a very famous quote it's about this division in Asia when Pakistan and India divided. But one of the leaders of the Indian freedom movement, he said that we will someday take over Pakistan. And the guy was like, how? It's impossible. You're separate countries. Now you're sovereign nations. It's impossible. He's like, we'll change their language. And through language, we'll change their culture and like absorb them. So it's kind of like a very, very deep idea that you change the language and you change the culture of any place. And this is why Singapore is doing this. They never let
You know what
anyone,
I also heard, by the way, that if you litter on the ground in Singapore, you get fined. You get fined the same way that you get fined in the UAE.
Yeah.
So I just, for me, the reason why I find the entire country so impressive is because if you think about it, between the 20th century and the 21st century, the change that happened in Singapore, it's absolutely insane, Majid. Like, their economy could have been like Thailand's, but they've completely surpassed it to the point that it's like the place for the ultra wealthy.
Yeah.
Yeah.
But there's just one problem. Sorry, I will say Dubai is better because even still, in Singapore, the quality of life that you're talking about is very expensive. In Dubai, it's still easier for a person who is earning 2,000 dirhams to enjoy the same quality of life. In Singapore, you need a lot of money
Majid,
because
remember?
things are expensive in Singapore.
I remember you told me
Even the
something
property.
about that creator. I forgot his name. But
Nas Daily used to live in Singapore. He set up office and he set up his like global headquarters there, and then he moved to Dubai. And then he set up his head office in Dubai. So even he realized that Dubai is better than Singapore because property prices are more expensive. We always talk about Dubai being expensive, but Singapore is more expensive. Hong Kong is more expensive. New York is more expensive. So Dubai still has a lot of like room to cover.
Yeah.
Even still global standards, Dubai is still cheaper. So yeah, moving on. Let's go to the third story. It's a media streaming kind of a story. But it's interesting because Warner Brothers Discovery is making a big move in the Middle East streaming market. They've acquired a minority stake in Dubai-based OSN Streaming Limited. The $57 million deal will give Warner Brothers about a third of the company as it seeks to expand its regional presence.
Now, the investment, subject to regulatory approval, will be done in stages. Now, OSN Streaming provides both global and local TV content, and this deal will see both firms invest in locally produced content while exploring new synergies, according to OSN Group CEO Joe Kaukabani.
This partnership builds on an existing relationship. OSN already holds exclusive streaming and broadcasting rights to Warner Brothers' HBO content and film catalog in the region. With this new investment, both companies will explore ways to expand their offerings.
Now, the Middle East's booming entertainment market is attracting global players with rising disposable incomes and a young, tech-savvy audience fueling growth. Now, regional streamers like OSN, Stars Play, and NBC Group are competing with global giants like Netflix and Amazon Prime.
And Warner Brothers is no stranger to local partnerships. It fully acquired Turkey's Blue TV, which is somehow part of the MENA region, in 2023 after an initial 35% investment in 2021. However, Warner Brothers Discovery's regional chief, Jamie Cook, said this OSN deal is likely the company's last major M&A, which is a merger and acquisition move in the region, though he left room for possibilities. So yeah, it's big because 57 million is not a small number, and they
It's
took
not
nearly
whatsoever.
1/3 of the company.
You know what's really
Yeah.
funny, actually, Majid, is I got OSN like before yesterday. No, like I signed up. I signed up.
OSN
to-
Plus, right?
Yeah,
It has a
OSN
lot of
Plus.
great series.
I signed up and I was just like taking a look at it. And so the fact that this all happened at one time, to be honest with you, what I'm seeing in this is that Warner Bros, they're trying to, get a piece of the cake of, a streaming platform that's rising in this
Yeah.
region. And, as you mentioned how previously they've acquired Turkish.
Blue TV.
Yeah, they want to be everywhere.
Yeah.
They want to be
See,
everywhere.
the idea is, even there was this very nice quote by OSN CEO, I think. He said, I don't remember the exact quote, but the idea was that the more movies, the more consumable content we have, the better it is. And these mergers, these streaming giants mergers, regional, local, global, all of them coming together, it's like they're bringing everything in one place. Eventually, maybe someday a utopia, like 50 years later, we'll see only one streaming platform where everything will be, right? But obviously, very utopian idea, but they are trying to merge everything. So these guys coming to Middle East, taking a stake in OSN is most probably because Arabic content is doing great. And most probably, this is according to their CEO, the last merger and acquisition. But what if NBC Group tells them that, oh, maybe we're selling 10% of our stake, they may go there.
Exactly.
So
And that's
we
why,
will see all of this
yeah,
happening.
the connection, it's also so interesting because, OSN and Anghami,
Yeah.
they had a merger, and NBC, correct me if I'm wrong, but they have a 14% stake in Anghami. So, when you take a look at that entire loop and how it's all connected, I think that Warner's is swooping in exactly at the
Yeah.
most perfect time.
And they understand that the market is growing. The local productions are so many.
But you know what's really great, Majid? Shahid.
Yeah,
I
Shahid.
love Shahid. It's amazing. Like, I was actually able to watch a show for free.
Nice.
I don't know how I was able to do that, but it had ads. It had ads. But I just thought that was really interesting because a platform like Netflix doesn't even allow that.
Yeah.
And by the way, Disney is killing Netflix. It's absolutely killing it because of the fact that, I was reading something where Disney, the amount of years that they predicted they would need to at some point beat Netflix actually went down. Because of
Nice.
the fact that what Disney did is that they actually made their memberships cheaper than Netflix's memberships. And more people are going on Disney Plus. By the way, it's great. I would say it's
I have
better
all
than
of them,
Netflix.
so I know. My wife bought all the subscriptions. She watches everything on those platforms. But yeah, I think sooner or later, there's this idea of IPTV as well. We'll talk about it someday in detail. What IPTV is. There's an illegal form of IPTV and a legal form of IPTV, which gives you access to everything on all platforms.
Wow.
So yeah, we'll talk about that someday. Just teasing it. So let's talk about Aramex's implementation of global strategic alliances. Aramex, everyone knows, is a big giant, a prominent logistics and transportation company based in the Middle East. They have leveraged the concept of global strategic alliances to expand its reach and capabilities. Strategic alliances involve partnership between organizations to pursue mutual benefits while maintaining their independence.
Now, established in 1982 in Amman, Jordan, Aramex faced challenges in entering the global courier market dominated by established players. To overcome these obstacles, Aramex formed alliances with international courier companies, enabling it to offer global services without extensive infrastructure investments. Now, notably, in 2003, after DHL acquired Airborne Express, Aramex co-founded the Global Distribution Alliance GDA, a network of 40 express companies with combined revenues of $7.5 billion. Now, this alliance allowed Aramex to extend its global footprint and compete effectively in international markets.
And through these strategic partnerships, Aramex accessed new markets, shared resources, and enhanced its services offering. The alliances facilitated knowledge exchange and operational synergies, contributing to Aramex's growth and its establishment as a key player in the global logistics industry.
Now, recently, Abu Dhabi Sovereign Wealth Fund ADQ, after a successful voluntary tender offer, became a major shareholder in Aramex. Now, Majid, correct me if I'm wrong, but isn't it Fadi Gandour who founded Aramex? Is it him?
No idea. I have Fadi Gandour is maybe he has a stake in it, but he's a very young, not very old person. Aramex is very old.
Yeah, it was founded by him. Yeah, it was
Aramex?
founded. It was founded by Fadi Gandour and Bill Kingston in 1982 in Amman, Jordan.
Oh yeah,
Yeah.
nice. Good to know that.
The reason why I remembered it, it's because I follow Fadi on LinkedIn, and I have not even met that man, but I truly think like a conversation with him would be absolutely lovely. Like his insights, especially on AI, on how the new world is changing,
Nice.
and especially knowing his age, Majid. I feel like with entrepreneurs, the way for you to continue being a successful entrepreneur is you need to keep up with trends. You need to
Yeah.
keep up with trends. You need to keep up with changes, and depending on those changes, you need to change how you're adapting in your market.
Yeah, and the funny thing, interesting two facts, as Word said, the company was founded by Fadi Gandour and Bill Kingston, two people in Amman, Jordan, and it's the first Arab-based company to be listed on the Nasdaq Stock Exchange. There's a book about them. The World is Flat. It's by Thomas Friedman, so he profiled the company in his book. So yeah, check out Aramex. They have been now acquired, like majority stake has been acquired by ADQ. They tried to buy Aramex through one of their companies, ADQ, but that deal didn't went through. So ADQ bought a majority stake. But let's see how and where and what happens to Aramex in the future. So that's it for today's Smashi Business Show. If you enjoyed the show, make sure to follow us on all social media platforms. You'll find us as Smashi Business everywhere.
And don't forget, we also have a daily business newsletter packed with the latest news and trends and deep dives. You can subscribe to it using the link in the description.
The Smashi Business Show is a Smashi Business production, part of the Augustus Media Podcast Network. We're proud to have 1.5 million monthly listeners across all platforms. And if you're one of them, a huge thank you for being part of our journey. Take care. Have a great day. See you tomorrow.
Bye-bye.